I'm Nate Lind, and I help people interested in buying or selling online businesses get the transaction done without the deal falling apart. If you're looking to buy or sell online businesses, then be sure to keep tuning in for more videos like this one. Be sure to subscribe and hit the bell for notifications about new videos and interviews. And introduce yourself in the comments. Are you a buyer or a seller? Enjoy the interview.
Hey everybody, welcome back to ClickFunnels Radio. If you've ever wondered if you should sell your company, this is the podcast you want to listen to. I have the opportunity to have my dear friend, Mr. Nate Lind, here on the show with me. He's a guy who has had over 23 different supplement brands, 9 of which have done over $10 million. He's an e-com entrepreneur who's been crushing it for years, sold a lot of businesses, and now is actually working on it from a board advisory firm, from a lot of other e-com places, but more importantly, is really helping those people who are trying to sell their companies from an M&A standpoint, get involved in that, either to sell or to buy. So if you're looking to either buy or sell an e-com company, this is the podcast you want to listen to. So Nate, welcome to the show.
Thanks for having me, Dave. I'm glad it's been, I think 2017 you had me on. We were talking about supplement sales back then. I had a little over close to $100 million in sales under my belt. And now I'm helping people sell their businesses.
It's crazy. I always love seeing the evolution of entrepreneurs and the things they do. And again, anyone who has as much experience as you have, it was very easy to see you make that transition. And I think it's an important one for a lot of people to understand. Some things we were talking about before we kind of started recording here, and that is this whole idea as far as it being a seller's market. But before we dive into that, I want to kind of talk, if you don't mind, give people a little bit of a flavor for what's the market really like? When should you sell? What are the things you should be thinking about?
Yeah, absolutely. So the timing of your sale is probably the most important thing when you're considering it. Most folks, they're just unaware of what the market's like, and we'll talk about that here in a little bit. But the single most important thing that you can consider is selling when you're growing your business. So growing your gross revenue, and most importantly, your net profit, your net earnings. That when you're selling on the way up, you attract a lot of attention. If you are stagnant or you're declining, it is very, very hard, because unlike the real estate market, there's no collateral. Like there's no baseline of assets that a buyer can depend on. It's the goodwill and knowledge and fortitude of the entrepreneur. That's what's being sold. The listing or the reviews, like if it's an Amazon, store, the credibility of the brand, those have some tangible value to it, but not like real estate.
I think, Nate, that's the thing that over the last 6 years, I've been approached by a ton of different growth equity, private equity people, and they're always saying the exact same thing. That is, you want to make sure if you're ever interested in taking money, you need to do it when you're making money. Don't try to sell your company on the downside, because you won't get the valuations. More importantly, you won't even attract any buyers. It's just such a scary thing. No one wants to catch a falling piano. And
Yeah.
I think it's pretty crazy. But I think today it's been fun for me to see. I was talking with a couple of people not too long ago that this literally has become probably the only industry or business that literally grew. I think you made mention of as well in second quarter this year was the whole e-com market. You want to kind of expand on that?
Yeah, absolutely. And that's attracted a ton of attention. So there's been numerous reports that have, economic reports that have come out that have, been shining the light on e-commerce and how, how in Q2, selling online and online sales was the only sector that grew. So that's attracted a lot of really interesting attention. And for example, because I've got a lot of listings, I'm representing a number of companies, and I'm a broker at Website Closers, which is a large firm. They're the oldest, the biggest, the most established brokerage of selling online businesses, e-commerce businesses, sales funnel based businesses. Your ClickFunnels crowd. We've got one of your Two Comma Club members under contract for a nice 7-figure plus sale. So what we're seeing is all of this, old money is flooding into e-commerce. I was talking to a mushroom farm, a company that owns a mushroom farm. It's been around for 90 years. It's the biggest mushroom farm in the Northeast. They've got a ton of money and they're looking to put it into e-commerce. That's one example. Another family office I was talking to, they've got $500 million worth of plumbing businesses scattered across the country, and they've got a ton of money and they want to get into e-commerce and everything. And what all of them are looking for they really want a platform. So somebody that is that it's a large enough business that the primary entrepreneur is going to stick around. They're going to keep, they'll sell a majority of the business, but they'll retain a minority interest in the business, continue operationally, and be that nucleus for other acquisitions to then get bolted on around it. All of these big companies, the only way for them to get into e-commerce right now is to buy e-commerce businesses. They're way too far behind to be able to enlist the aid and do a startup and create a new business division. They will lose millions of dollars doing it that way. They all know it, so they all just want to buy one.
I love it. I think it's funny. I talk to people all the time as far as, is it easier to start a company or buy a company? I'm like, it's always easier to buy one than it is to start one. And I think, as you made mention, there's a lot of money sitting on the sidelines. And so I really want to make sure, for those of you guys who are listening, understand whether you're ready to sell or not, these are the types of things you need to be paying attention to. And I really want to also make sure you understand this isn't always necessarily just a physical product, because you may mention there's some information products as well. Can you kind of expound on the difference between physical and information e-com?
Yeah, so we've got buyers in all of those sectors. So they some of them particularly love physical products. So it's consumer goods. It's stuff that people are selling on Amazon, eBay, Etsy, Shopify. Their own custom storefronts. ClickFunnels sites and stuff as well. They love that stuff. They also like information-based products. And typically, it's a little harder if it's a personal brand that's being sold. But we're going to have a 7-figure sale for a Two Comma Club member here pretty soon. That was a personal brand and it was a digital product. So I'll be excited to come back around and share what all's gone on there. Awesome. We're not quite over the finish line there, but it's going in a very, very positive direction. But yeah, so for information products, that can be anything from education systems. We have a lot of folks that, they put their heart and souls into stock and options trading and crypto trading based algorithmic based systems. And they've accrued, some recurring revenue from memberships in that way. We've got other folks that are selling, training and education. We've got an EDU. It's a French-based education sort of e-learning platform that's for sale right now, and it got like 250 non-disclosure agreements in like 3 days. And that's actually not uncommon. I often, me and some of the other brokers at the firm, we kind of poke fun at each other because, when we have a listing that goes live, we have to sit there all day signing non-disclosure agreements. Because we can't release any confidential information for our clients until we have that on file. And so I've got my Gmail all set up, and there's a label. And so when I go into it, I can scroll through hundreds of non-disclosure agreements. And that's one of the awesome things about Website Closers is Jason and Ron have been around for so long, the company founders. They've been going to masterminds and talking in events and doing their own podcasts and trade shows and that kind of stuff. And so we have amassed all of these buyers that are interested in these businesses. And it's something over 125,000 people on our email list. And then, for every listing that goes live, we have anywhere between 100 and 250 non-disclosure agreements. And that represents an individual buyer who has expressed interest. They've watched or read the teaser that's out there that's published on our website, and now they want to get the confidential informational memorandum, the SIM. That's basically the prospectus, the packet of information with financials and that kind of stuff in it. And then that begins the process. We start talking to those buyers and vet them and figure out who's what their backgrounds are. So I'm on the phone with buyers all the time. And I've got these really interesting conversations with folks now, even more so than ever, because they come from, anybody right now that was in, retail real estate, restaurant real estate, in those areas, they are hurting because all of these restaurants and retail stores that are, not making payments and they have a ton of money. They just have to diversify it in different ways. And e-commerce is the obvious choice because of its success lately.
I love it. So when you talk, one of the things you kind of alluded to was this whole idea as far as a roll-up strategy. And I know that I see a lot of this taking place these days. Even from ClickFunnels standpoint, we've looked at some potential roll-ups. If you don't mind, explain to people what exactly a roll-up strategy is and how what they might feel as a small company might actually be able to participate in a roll-up strategy.
Yeah, absolutely. It happens in a couple of different ways. Probably the most active one right now is there's a series of companies that are focusing on Amazon specific entrepreneurial entities. They call them third-party sellers. So Amazon stores, Shopify stores as well. So a lot of e-commerce physical product sales companies are getting a ton of attention. In fact, Thrasio is the fastest billion-dollar unicorn company, a profitable one as well, to get to $1 billion. And their entire strategy was buying Amazon third-party seller stores. They acquired 40 or 50 of them in about a year and a half. Half of those from us here at Website Closers. We sold them a whole boatload of them. And they put that together. And the idea behind it, it's kind of like what public companies do too. The larger the company get, the more its net earnings are, the more valuable it is. Its multiple is larger than the smaller ones. So imagine for a second a company that's got $50 million. They're worth 10x, and so let's just say, and they're worth $500 million, $500 million. They can buy a smaller company, and they can still pay a pretty nice multiple for it. As soon as they acquire that company, it's automatically worth more under their umbrella. So they literally are arbitraging and purchasing multiples. They're paying 3x, 4x, 5x net earnings. And it's immediately worth 8x, 10x, 12x, 15x on their balance sheet. So they're making money instantly. As soon as a transaction is closed, they've already doubled their money on it. So that's one example of what's some activity that's going on right now. The other is...
Let me real quick, I'm going to interrupt John, because I know for those of you guys who are listening, understand that you might be able to participate into a roll-up one of two ways, meaning you might be the company that gets bought and gets rolled up into something else, or if you have an information product, or you have a supplement product, or an e-com product, or something that where you're thinking, if I only had this, I could go out and actually buy that, add it to your company, and actually scale and grow yours. I know in talking with Salesforce, a friend of mine, their company was valued under $10 million. And so Salesforce had a thing where companies under $10 million, they basically gave them a 1x multiple. And so they pay whatever there was up to 10 million. And then from 10 to 20, it was 2x. And from 20 to 30, it was 3x. And so he actually took I think he had about a $7 million company. He went out and got money from Salesforce, rolled that up into basically becoming 21 million, where he got 3 times multiple. So that whole arbitrage basically was, he now has a company that's worth, let's just say he's at 25 million times 3, he's worth $75 million. He then can go out and take money and then go buy a company that's worth 10 million for 7 million. He adds that 7, and that 7 basically adds 21 million to his bottom line, or to his top line valuation, just because of the simple math. And it's funny money to a lot of us. It's like, that makes no sense. It's the same company. It is the same company, but it's rolled up and it's part of a much larger company. I think you see this across any of the large corporations where they go buy some other company. I mean, Salesforce has done this for years. They'll go buy a company, and then all of a sudden they add it to their stock goes up. And you're like, how can your stock go up if you just spent money to buy something? And I think it's a fascinating strategy.
Yeah, the basic economics of why it's worth more is it's reducing the risk overall. Once they acquire that smaller business, now that smaller business is a much lower risk profile than it was before, because now it's got all these additional resources. It's got the back office of Salesforce. It has their marketing power. It has all these other things. So risk is the probably most important part of the M&A experience. Buyers won't buy businesses that are risky. That's why they won't buy them when they're sinking. They'll purchase them when they're growing, but when they're going downhill, buyers don't want to touch them. They quickly go from being a seller's market to being a dumpster fire that nobody wants to be near. So that we've got that joke around the office too. Sometimes we, unfortunately, entrepreneurial, ventures, they go up and down. I've had them too. I've crashed and burned. I've had some terrible experiences, and, when they go down, they're not worth anything. So, That's just what you have to deal with. But let me get to the next roll-up strategy. So this is that platform business. So this would be something representative, probably more common right now. There's like 8 to 9 roll-up companies that are buying those Amazon stores and doing that. But there's even more old school investors and people who have money that are, from the automotive universe, from, farming and agricultural, that want to get into e-commerce. And this is their strategy. They're going to look for a large e-commerce brand, whether it be digital or physical products. Physical products tends to get more of the nod these days than the digital products do, because there's a tangible good that's going out to a consumer. It's very, trackable, traceable. You can see, the customer satisfaction with it, based on them not refunding and not returning it. So it tends to be a focus on that. And it has to be a brand at large enough scale where the founders and the proprietors, either by themselves or with very strategic vendors and partnerships, or have a team of people that constitute some infrastructure that could be the starting point for more and more acquisitions after that. And that tends to be, kind of where the focal point is. There's a lot of folks out there raising buku dollars, major money, and then out hunting for that lead brand product. So for any entrepreneur out there that's got an e-commerce physical product based business that's got over $2 million in net earnings, you got to get on the phone with me. Like, give me an email, Nate at websiteclosers.com, because I've got a ton of buyers that are hunting for you, and you're a bit of a unicorn. You're hard to find. So if you're out there, Nate at websiteclosers.com, I've got buyers for you.
I love it. Well, I think, I know some people are going, gosh, I'm not at the 2 million, but realize it's interesting to me to see how many people can participate in M&A activity.
Yeah, I can talk about how the smaller companies are doing roll-ups on their own, and they're using a really cool financing vehicle right now from the Small Business Administration. Right now, the SBA has this 7A program where they will lend to you up to $5 million, and it's kind of like a mortgage on a house. They'll lend up to 90% of the acquisition price, and you can use it as many times as you want until you use up your $5 million. You do have to personally guarantee it, which is a bit of a downside, but you can use that. It's typically a 10-year loan, 10-year note, and it's very reasonable interest rate, 6%, 7%. So you can use that to go and acquire other small businesses. You only need to have about a 700 credit score. You need to have some experience in the industry. But you can go out and essentially you've got this blank check you can write. You've got to come up with the down payment, and you have to have some liquidity to pay the debt service. You have to make the payments. And there's a fantastic opportunity right now for businesses that are closed by September 27th. The SBA is paying the first 6 months payments for you. So you get 6 months of payments for free. But that's a really cool method. And I interviewed an entrepreneur on my Buy Sell Summit back in May. Remind me later. I'll make sure all your audience has got access to that. His strategy was to go out and use that financing vehicle, and he went and bought a $500,000 business here, $1 million business here, another $750,000 business here, and so he was able to leverage his money, just like in real estate. You're only putting down 15%. You hold another 10%, in kind of an emergency fund. And then all of a sudden you've bought this cash flowing business that the return on your investment is far better than any real estate investment, way better than anything you're getting in stocks, bonds, and mutuals. So it's by far one of the best investment models. In fact, it's such a popular strategy that when we list SBA approved businesses, it is like the bell has gone off and everybody's running for that business. It is absolutely nutso when our inboxes, what happens when that goes on. Everyone's looking for them because it's a simple way to get a really, really good return on your investment. It's a great way to get into it or add something to what you're doing already. If you've got some synergistic, kind of eyeballs out there looking for what you're up to. So that's a great way for anybody with, $500,000, to be able to get in on, jumping into something like that.
I love it. I think it's important as you start taking a look at how to grow and build and scale your business, realize that there's a whole bunch of opportunity out there. You don't have to do everything from the ground floor up. And I think, again, SBA loans are out there. There's other opportunities to be able to help really leverage and take advantage. If you've got the skill set on how to actually run an e-com business and can actually show that you can do it, man, there's a great opportunity for you to grow and to build and to acquire others that are struggling. I know we've looked at a couple of different ones ourselves over the years, and it's fascinating for me to see a lot of them kind of get up and running, and then people get bored with them, and they're like, I don't really care, but it's just kicking off cash flow. And so it literally becomes a lifestyle business for them, and they'd much rather just take a upfront check and let you just continue to take the lifestyle cash on the back end. So I would highly recommend, if you guys aren't familiar with this, you want to find out more, go ahead and email Nate at websiteclosers.com. I know a lot of people are going to be asking the question, and that is, if I had an e-com business, I want to sell it, what's the kind of the bare minimum floor that I would need to have? Either numbers or what's that work?
You can start really at any angle, but you're not going to start to see some serious interest until you're, about a year old, and you've put about $250,000 worth of profit, into your P&L and your balance, into your P&L. The other thing that's really important is you have to have professionally, created financials. You need to have an income statement. You need to have a balance sheet. It needs to come out of a tax, an accounting software. You use QuickBooks or Xero. I get this all the time, and it's super, frustrating, because that's, for any of you that out there that are into the sales funnels and that sort of stuff. Imagine the very first landing page, the very first thing that somebody sees in M&A. That's the financials. If you don't have well-prepared financials, they're not going to click on any call to action button and go to the next screen. So you have to have that first. That is absolutely a requirement that we work with, and we work with our clients on helping get those prepared if they're just totally upside down. But you need to have about a year's worth of track record and $250,000 worth of net in earnings, your actual profit or income. In order to be really desirable. Leading up to that, you can probably sell your business for 1x, 1.5x. You're probably gonna have to self-list on Flippa or Biz Buy Sell, which are not great experiences. It's a really frustrating experience. I've had a number of people tell me how challenging that is, and there's really just not that much education about M&A. I interviewed 30 experts on this and put together a summit called the Buy Sell Summit, and it's buysellsummit.com. Any of you are welcome to go to it, because there's such a lack of good information about this. And I interviewed lenders, attorneys, roll-up companies, several of them. I interviewed the guys from Thrashio, the $1 billion company. I interviewed a gentleman by the name of Shaquille Prosla, who, he and Ryan Moran went out and, bought a bunch of businesses, and, so he's got an experience at a smaller level. A bunch of other brokers I interviewed, and then shared my own commentary about what's going on in the space. So, I would encourage anybody that's thinking about it, you need to arm yourself with knowledge, because without, being well prepared or having a great guide in your corner, a broker like myself, or, having some experience on your side, you can spin a lot of wheels, you can waste a lot of time, you can lose a lot of money.
So for those of you guys who want to find out more, reach out to Nate. It's Nate at websiteclosers.com. Nate, any parting words for our audience?
I would just encourage everybody to consider, what would life be like if maybe they're on the other side of a, 7-figure, 8-figure, check. Just like you said, a lot of people get, tired or bored of what they're doing, and they've got some passion and some excitement for something else. And if their business is spinning off some cash flow, then, it could be it's a great opportunity. It is absolutely seller's market. Now is the time to capitalize on this. This is the e-com, M&A gold rush. Get your nugget.
I love it. Nate, thanks so much, bud. We'll talk to you soon.
Thanks, Dave. Thanks for watching. If you liked this video, be sure to subscribe and tell me what you thought about it in the comments. Your comments encourage me to continue posting videos, and they give me ideas about what to post next. I read and reply to every single one. Also, if you own an online business and you're curious of how much it's worth, click the link below to get a free business valuation with a member of our team. Who knows? It may even be me you're talking to.